You know, Bloomberg just published a study that said that over 64% of Americans are living paycheck to paycheck. Now, there's also a Gallup poll that recently showed that 54% of Americans actually own stock. Now, when I looked at those two numbers, it really was confusing to me because I didn't understand why so many people who are living paycheck to paycheck actually own stock. So I wanted to make a video today because I believe a lot of the things we hear about finances and how to become financially secure could be a little misleading. And I wanted to clear up some of that confusion. Hi, I'm Nicole. I'm one half of the Wealth Twins. And if you don't know who we are, please check the description below. I want to prove to you today using 5 reasons why I believe saving is just as or maybe even more important than investing. All right, so if you're ready to hear that, let's go. Now, the number one reason, or the first reason why I believe saving is as important, or you should concentrate on saving, not just investing, is because of power. I hope you guys can see this, but okay, power. Now, what do I mean by power? If you are feeling like you don't have any control over your life, or you're not just happy, you're just not happy at where you are right now, the easiest way to gain more control of your life and give yourself some personal power is to start saving money. It's something you can do by yourself, and it's something you can do right away. Now, why I say it's power is because when you start saving, it becomes a discipline. And any type of discipline you put into your life, once you start progressing, it will start making you feel better. Now, even if you don't know the reason why you should save, just that act of saving can move you in a positive direction. For me, it came at the time when I was saving. I didn't really know why I was saving, but I knew I should save because back when I was younger, that's the only thing I knew to do with money. You either spent it or you saved it. I didn't know about investing. It wasn't something that was taught in my house. So I was saving every week. My part of my paycheck every week I was saving, and I didn't know why. But guess what? One day at the job, I became so annoyed, and they tried me that day. I'm telling you, I was so annoyed at what happened at my job that I walked out the same day. Now, the only reason I was able to do that was because I had savings. I didn't realize it at the time, but having that savings gave me the power to leave a job I was not happy in. It also gave me the power to say that I can do something on my own. That personal power I received just by saving and not knowing what I was saving for allowed me to pursue other things in my life. I knew that I didn't have to rely on a check for very long because I had a high amount of savings. So having that savings and having that personal power is something everyone should experience at least once in their life. Now, another reason why I believe saving is just as important as investing is daily life. Now, I know a lot of things you hear when it comes to saving, people just talk about save for an emergency, have your emergency fund, 3 to 6 months of emergency savings, and then they don't say anything after that when it comes to savings. The only thing you hear after that is that saving in the bank is negative. You should never save your money in a bank. You should just invest. Well, I'm here to tell you it should not have to be an either or thing. It should not be that you're either saving for emergencies or you're investing. There's a big middle ground where savings can definitely help your life and improve your life. Now, one way is daily life. What about the wants in your life? What about the desires you have in your life? Every year, I have children. I want to put them in camp. If I only save for emergencies, how do I pay for camp? Do I take it out of my investments? No. You have to have money set aside for that. If I want to take a vacation, where do I get that money from? Should I put on debt for it? No, I don't think so. I'm going to use savings for that. There's a whole area where savings can get you what you want, and it does not have to be for emergencies. If you want to have a home improvement, every home improvement that I've done on my house, my husband and I have only taken out of our savings. We have not taken it out of our investments, and we have not taken it out of our emergency funds. It all comes from a savings bucket that we use for the wants and desires that we have. So don't see savings as an either or. Either you're saving for emergencies or you're saving just to invest. Use it to help improve the quality of your life. Go on those vacations without paying for it on a credit card. Pay for your children's lessons for music or whatever you want. Pay for your children's braces without going into debt. that should come from your savings. And call it whatever fund you like. Call it the daily life or the life fund. Save for the things that you think are going to happen throughout the year. And some things we know happen every year. Birthdays happen every year. Anniversaries happen every year. If you want to take a vacation, it happens every year. Car maintenance happens every year. Set some money aside for those things so that you don't have to go into debt or use your credit cards for those. And I'm telling you, that will be a way that saving outside of emergencies can help improve your life. You know, when we're talking about debt, why saving is a great idea and not just investing alone and not just saving for emergency fund is because debt is greater. It has a greater impact on your life than inflation. Now, I know a lot of people make this argument that when you save your money in the bank, you're actually losing money because of inflation. The bank is not paying you enough interest on your money to actually combat the negative effects of inflation. This is true, but if you do not save money and you are using debt to cover those daily life things that I mentioned earlier, and you're putting on credit card debt, that 20% or more that you're paying on your card is costing you more than what inflation is doing to you. So when you think about which one is your better option, should I save this money and lose, my purchasing power due to inflation, or should I put this on a credit card and then pay 20% out in interest? I'm telling you, take the inflation versus the interest. Take the impacts of inflation versus your interest. You do not want 20% being paid out on your credit card because you're afraid of the effects of inflation going to have because you have your money in the bank. It's just not worth it. The two are just not even in the same ballpark and in terms of the impact it has on your finances. Always choose the impact of, taking a negative impact of inflation because you have it in the bank versus putting on debt on a credit card and paying that credit card in installments over a long period of time. Now, when it comes to saving in a bank, yes, I don't agree with saving large amounts of money in a bank for long periods of time. That's not something you should do because, yes, inflation will take advantage of your money and you'll be at a disadvantage. Whatever money you don't need, after you feel comfortable that you have enough to pay for just life, put that in investments. But do what you can to not put on credit card debt. Now, I think most people are so caught up with inflation that they're using credit cards instead of saving. When you hear the numbers that 64% of Americans are living check to check, that means that they are putting their lifestyle on a credit card. And that right there is not something that is beneficial to anyone. So if you're afraid of inflation, be more afraid of what happens when you put debt on a credit card and have to pay that debt back. The next reason why saving is as important or even more important than investing is because I hear this myth all the time. They always say, savings alone won't make you rich. Now, I agree with that. Savings alone won't make you rich, but savings is a prerequisite for you becoming rich. You cannot be rich without savings. Do you understand that? Savings alone might not make you rich, but you cannot be rich without saving. Now, here's an example of what I mean. 8 million people who are making over $100,000 a year are actually living paycheck to paycheck. Out of the 64%, that's actually equal to 166 million Americans that are living paycheck to paycheck. 8 million of those Americans are making over $100,000 a year at their current profession. Now, most people would think making over $100,000 a year will make you rich. However, you're only rich as long as you have a job. If you lose your job, you are no longer rich no matter how much money you make. It becomes a matter of how much you save. So, if you are concerned with being rich, you have to have savings, because if not, the only way you can call yourself rich is as long as you get your paycheck. So if you want to be rich and you don't want to take out of your investments, because that's the last thing you want to do is take money out of your investment, because that definitely destroys your wealth, you have to save. Saving is a prerequisite for being rich. Speaking about saving so that you have cash on hand rather than just using debt and credit cards to get by, and also having savings so that you're not living paycheck to paycheck, another reason why you want to be able to save, because saving can make you rich, is because of liquidity. Now, in times of recessions, in times of mass selling in the market, housing market, stock market, those that have liquidity will win the game. This is a great way to be strategic with cash. A lot of people think right now you always have to put money in the market, money in the market. No, there are a lot of people waiting on the side, just stacking cash because they're waiting for the opportunity that when a recession comes, they're going to increase their wealth big time. They're going to buy the houses that are going to go on sale. They're going to buy the investment properties that are going to sell. They're going to buy the stocks that are going to be so low because the people who don't have savings are selling in panic mode. The guys that have the cash on the side and are ready to deploy that cash in a strategic manner are going to be the ones that make a great deal of their wealth in the times of recession or in the times of any type of economic turmoil. Using cash and keeping cash on hand is a strategy. Some people might not say it's the best strategy, but if you're ready to deploy that cash and you have a strategy that's already mapped out how you're going to build your wealth, having that cash on hand and having that savings on hand is going to be the way that you actually execute your strategy. Now, I hope I was able to convince you with my 5 fancy reasons why saving is just as important to your financial life as investing. So please, take my advice and don't let anyone deter you from saving, because it will give you power, it will give you a higher quality of life and give you the desires and the wants without putting on debt, and it will also help you become a better investor because you can stay in the market longer. So do yourself a favor and start saving. That one action can lead to you building wealth. If you want to know how Nadia and I were able to save over 75% of our income, check out this video over here. I think you'll find some value in it.